G'day everyone. Just getting my head around this new software. This is a software that I'll be using while I'm in Bali. I don't quite believe that the GoToWebinar software will work well in Bali, particularly for live webinars. This software has a bit of a delay of 1 minute, and its buffering is a bit better. So when we're doing, if we're doing a spot solo webinar, then we should be pretty well good to go. So welcome to the World Indices Strategy Update for Sunday the 31st of August 2014. At the moment we have bear pause warnings on a large number of stocks and indices around the world. And we're currently a bit overloved. This has not resulted in a big collapse, but it is something to be aware of, and hopefully circumstances and needs and objectives, financial situations or needs. Consult a licensed investment advisor before making investment decisions. Past performance is no guarantee of future performance, and there is a risk of loss in trading as well as the potential for profit. So it's your decision to trade. This is for educational, and if you really want to have a go at it, think about it and consult a licensed investment advisor or your financial planner. Whatever floats your boat on that front. So we're looking at the stock market. What have we seen the last couple of weeks? The US continues to press really boringly higher while headbutting some important round numbers. 4,000 in the NASDAQ. Everyone's talking about the NASDAQ having gone to new highs, but that's not true. It was around 4,800 back in 2000. We know the NASDAQ is the main driver in the US market. It's been the leader. And a lot of floats want to go with the NASDAQ rather than the old Dow or NYSE indices. The thing is, it's been headbutting those big round numbers, 2,000 the S&P, and it's hitting some pretty important time frames. Now these time frames, the Federal Reserve destroyed a lot of the time cycle work back in 2009, and the central banks destroyed that. They also worked on destroying investors and conservative investors that went to cash. People would, at least savers is probably a better word. We do see that stocks are overloved, but we haven't seen the zenith of the excitement in the market that we would expect. We haven't seen excess speculation. In fact, quite the opposite. We see investors saying they are investors, they are not traders. So this is probably not a huge top in the overall scheme of things, but it would be a nice top to see happen if Janet and other central bankers will let it happen and come back down into a buying zone to give us an opportunity for the next seriously good run. We had a good run for Europe this week with the DAX into really corrective territory. It got into the retracement area that we normally expect, and I think that's probably one of the better ones to short. China backed off a bit as I hoped. It has got a five-wave structure to the top side. We haven't yet seen it do its thing and destroy itself though. The Japanese Nikkei did okay with the US dollar strength and yen strength, basically jumping around on US dollar, yen, and US and strength like that. It looks like I can't do Q&A. I didn't bring it up before I started it. That's one of the little bugs. That is really annoying, and I apologize for that. We don't seem to have the thing I'm looking for. Okay. It's a bit frustrating. I may have to come back in and go out, see how that goes. If somebody can send me an email and give me an idea of what's going on for them, you can probably send me an email if you wanted by questions, and we can probably jump out again later. One second. Oh, there's a lost soul in the audience. Need to go and rescue. This. Okay, so back onto that topic. Europe continues to smell a bit badder than the rest, and that's probably Ukraine. That could be serious, or it could not be serious. Who knows what's going on with the Russians? And basically, volatility fell down again to support. So nothing that we can say to rock the boat. We've still got cheap, easy money. Therefore, people who are earning interest will be still inspired to invest in equities over time. We're just hoping for a dip. So let's look at some technicals. We can see that the Dow is on a struggle street pattern. In fact, it's the Paris end of the struggle street pattern. We can see that this pattern, 2 out of 4 times this will break and run up out of this pattern. 2 out of 4 times this will break down and collapse out of this pattern. If it does collapse, the target is down to 1440, down around here. On a big scale, and a break here of 16,320 is the first clue. It gets ugly below 16,320, and that would panic people. I don't think the Federal Reserve wants that to happen too easily, and they've kept it moving. But we're in the quality area of the struggle street pattern. Last time we spoke, we were down the bottom end of that. It looked like it could have broken. It did not. This is a quarterly chart, just to be aware. This is a big long-term picture. On the Dow or the bonds, well, we look at this normally. We've seen the confusion and congestion, and it's been push me, pull you, and the winner is this week. We don't know. It's basically line ball as to whether the bonds won this week or the equities or the Dow won. And I think we have to say, quite frankly, that the Dow did good, and the bonds also did good too. Now let's have a look at the forecast. Now this forecast has been useless, other than occasionally it's been picking some good timing for getting in and out, but it hasn't been useful for the first time in basically 20 years in terms of when things should happen. Yeah, we got okay down in February. We were sort of okay at the end of May, but generally we're looking for a retest into mid-September before continuing. Now this is a normal forecast, and as I say, this year for the first time in actually 21 years, because I've been doing these forecasts since 1993 publicly, and since 1991 I've been doing them for myself. This is the first time that it just hasn't been out of the water. So what we'd love is a little shakeout and then a next move up from mid-September. Let's have a look at what is working. This is the normal pattern. This is another forecasting technique that I use. The normal pattern, we're looking for a dip into the third week of May, and this, where is that pattern? And it sort of came in here. This is the right area, and it took off from there. It's still got, we were looking for topping mid to late August, and as you'll see later, with the next bias mid-September. So that's your normal pattern before it takes off again to the upside. So we're hoping for a little dip and then a rally. Now, when I say hope, it's very hard to get anything other than annoyed at what the Federal Reserve is doing, because it's just a no-brainer. The more you think about this bull market that has been manufactured by our friends at the Federal Reserve and central banks, the worse it could be. You know, they're putting money into places which is not productive, really. Now, this is the Dow Transports, as we said. This forecast went out the window, but I'm still keeping it because we're still using it for timing reasons. We look for a low for a bounce from mid-September. Again, this is the time where you can start to see it to work up. Let's look at the Dow cycles, and we can see a normal time period was topping here, which has been useful. And so far, if you notice the volume, it's been a light retest of this area. Now this is the Dow Transports, remember that. And generally it calls for a pullback down into this sort of period before a takeoff. So into the last part of the year. So generally, just before Labor Day, we get a little bit of a rally in the market, in the US stock market. We're seeing that. It's nothing unusual. It's quite normal. What I would expect is, if it fails at this top in the Dow Jones Transports and the Dow Jones Industrial Average has a little bit of a risk of a pullback. Now let's look at the Dow components. And people talk about the Dow Utilities and they talk about the Dow Jones Transportation Average as leading indicators. Now what we're seeing here is the Dow Utilities have only just got to 567. Now utilities are a bit like a bond. They are a steady cash flow. People need to pay for their water, they need to pay for their electricity, and in some cases, if they're alcoholics or cigarette addicts, they need to pay for their smokes. So these are things that people basically have to pay, and if they get cut off, they either don't live or they don't live very well. So they tend to pay their bills well. Now this is tested the 2007 top, and it's sort of just hanging around there. It's spent the last two quarters half in, half out new territory. We see the Dow Transports has kept on going. It hasn't yet stopped on the quarterly chart, so we're just picking up the larger time frame stuff. So what I think with this is, you watch the utilities, and a break below this 5,050 area could start to be of concern in the utility space and may start to show a sign of a pullback. Now, we've only got 2 weeks into mid-September. It would be nice to be short and sharp. We've got some sort of war talk going on, and Obama looks like he doesn't want to get involved in Iraq other than sending stuff across. They're a bit reticent because really they're fighting against their friends, the Saudis, who are funding this ISIS bunch of people. The funniest thing, the most radical form of Islam actually is funded by the Saudi princes. And the Americans say nothing. I think it doesn't suit them. So we got an early rally from early August as we expected. The normal cycles are unkind to the US equities from late August. Janet's wallet improves. We saw a Bloomberg report saying that she'd gone up something like about $8 or $10 million over the course of her experience at the Fed. Her book is oriented to growth, and so we know she's indulging a little bit of market manipulation so that she could get some money. Maybe she likes her retirement, but certainly she doesn't like to like pensioners, I think. Bull horns, we have this a warning about the bull horns that's going on in the world indices. We currently have 138 S&P OEX stocks. These are the optionable stocks on bull horns warnings. There are no indices on bull horns warnings at the moment, so no global indices that I can see that are ripe for a correction. None of them have come low enough. So that's a very low count on the bull horns warnings. We have 1,153 stocks on bear pause warnings. It is not as high as it was at the most extreme. We were getting 1,500 count, 1,600 counts, and as low as 80 on the bull horns warning. So there's a distinct high level of love for stocks. We see in the short term the Dow Jones Industrial Average on bear pause warnings and in wave 5 structures. We see the E-mini S&P, the S&P cash and the S&P 500, also the S&P growth, S&P value index. They're all in wave 5s and on bear pause warnings separately. So what this means is it's largely a hard market to buy, and the bias in the shorter term, cyclically and pattern-wise and sentiment-wise, are for a possible pullback. If you're long as an investor, do not panic. There is no need. We also see the DJ Euro Stoxx 50, the CAC, German DAX, the S&P 500, S&P Value Index, the S&P Growth Index. Sorry, I mistyped those things. The SG is the Growth Index, and the Value Index is the SU. And with a bull-bear ratio approaching 10 to 1, or 1 to 10 actually, it is risky buying to me. We'll have a run through a few other things, and we'll have a look at some of the markets in stronger detail right now. And where are we? Let's look at the S&P 500. Now, traditionally, we see a rally in these markets at this time. We notice simply on the dailies it ain't made it and it closed on its highs. Now those close on the highs, this is the S&P 500 futures contract. Those close on the highs can be a reason to sell, and we actually have a profit take on if you are long the S&P. It's a good idea to take profit first thing in the morning on Tuesday US time. The natural tendency is when the US is on holidays, they do squeeze the shorts out, so we should see a bit of a short squeeze session. And as you all know, my target is 2010 or 2009 in the S&P 500 cash index. We'll do some work on the longer term targets soon. And we're looking to short at 2009. And let's pick this up. Quick rundown of these ones and then we'll move on to the US. And the symbol's not coming up, which is highly annoying. Okay, it could be just because it's a weekly. Let's see if we can get these out. I'll clean this out. This is, it's brain. Oh, there we go. Okay. We're looking here at the E-mini futures. And we can see a day of indecision the other night, last night. We see a target to 2017. I don't think it's going to get there easily. I think it's more 2009, which is a higher target that we've had for quite some time. We notice a little bit of the volume dropping off as it's rallying, and currently it would have a little bit of a vacuum effect, much the same as we saw in Woodside Petroleum the other day. I talked about that vacuum. If it broke back down through that range, we saw Woodside Petroleum collapse. 1983 is that breakdown point, and the best thing we can see is looking down towards 1945. As I've said to those people who've just come in, if you have questions, I'll get you to email them to david@adesk.com.au, and then what I'll do is then I'll just answer those. So at the moment, I haven't got the Q&A system working. You have to actually put it on before you start up the service. This one apparently. Let's look at the Dow Transports and what we've seen so far. We've seen a lack of movement up on this. Nothing really. It's a light volume retest of this previous top, and really the focus would be on 79.26 on the downside. If we're going to get a correction over the next couple of weeks, that would be the most realistic area, 79.40 to 79.26 on the downside. Notice the lack of volume on this correction, which shows it is corrective down here, and this might be A, B, C, and a flat correction for another move higher towards 8,900 area. The Dow Jones Industrial Average itself, we see an inside day over the weekend. We see people bullish, but not speculative bullish. So my target would be down to 16,800, and at best, if it really gets gnarly, down to around about 16,460. Below 16,300, it's over for a while. I don't think that's going to happen. I think the Fed will come out and manufacture some other sort of bullshit. Keep it going. Now what we see here with the E-mini futures. Sorry, this is the mini Dow futures. We see a bit of a heavy volume affair on the other day, on Friday. It hasn't broken down. A breakdown would be below 16,931. First bus stop 16,780. We have a look at the S&P 500 cash index closing on its highs. A breakdown below 1985 starts to cause it some trouble. We notice it's not trending. Its drift is up, but it's not trending to the upside. So this top is a little bit suspect. I'd rather be buying down here at 1892, 1903 for the next leg up. That would be my most preferred area. If you can hold off for a couple of weeks, I would like to see it down to that area. That's about a 5% decline. It would be nice to see it even further, but I don't think you'll find down here there's going to be enough given the current climate. We've done the E-mini, and we can see it didn't know what to do with itself on this top. If you pick it up as a doji chart, you will see, I can never remember where to put dojis in this. That's really funny. There we go. You see the doji, basically this last couple of days, it doesn't want to close higher, it doesn't want to close lower, just been flat close. And if it break 1980, then expect down to 1960. So at the moment, nothing to say that it's dead yet. Looking at let's look at the Nasdaq. Give it a view. Notice it popped again a little bit higher, and it's still trending up. So if you're going to be buying any US indices, it's the Nasdaq with the stop at 4,033, and that's on the index. The Russell index, you'll notice that it hasn't really had as good a time. Now, quite often the smaller caps are the run last in the move, so it seems like it's ready to go towards 1204 and 1238. If you've got a dip to buy, your stop would be at 1148 on a close basis with 1150 on the target area. Volatility index. Now we see the volatility index, as I said, for most of this next few years, it's not going to get much above 20, and it hasn't since I've been saying that back in basically mid-2013. It's popped its head a couple of times above 20, but it's unlikely to do that until 2016-17. And down the bottom at the moment, it just keeps on eating into that support. So as I've said before, it's a buy on dips down to 10, and it's a sell on rallies up to 20. And this is a quarterly chart of them, and let's have a look at the weekly chart. You can see it gets up, falls back down. My target was around about 17 on the last rally, and it's probably about 18 on this next rally if we get it. If you've got the chance to buy at $9.73, perfect with a stop below $9. That's safe buying. Remember, it's got the K. Now we're looking at our volatility index ETF, the VXX. Now we did buy the breakout of this. It's come back down to where we're just in where we got out at, and our stop loss is at $27.50 on this. It'd be nice to see it pop above 30, and then that would be a profit take there. Let's pick up on what's going on in the German DAX. We'll also look at some wave counts. Let's pull up a wave count on the German DAX itself. Oh, actually, no, let's do something more fun. Let's look at what the Dow Jones Industrial is. Now, this is, hopefully this is on the longer thing back to, yeah, it's good. It's on the ADEST data. The ADEST data goes back a lot further than the e-signal data. So you've got your wave count based on the really big things. And as you can see, The natural tendency of the Dow is to grow. That's because human nature grows, population grows, and this is self-selecting stock index, which chucks out the bad ones and puts in the leading ones if they want to go into it. It'll take a little while to do that. While it's doing that, I'll pick up another one that will be a bit fun, and we'll look at the German DAX. I think the data on this goes back to 1994, yeah, pre-1994, so it's longer than the e-signal data. 1991. What you can see here in the German DAX is it believes it's seen a third wave dip, and that I can't disagree with that terribly, with a target towards 10,367. At the moment, it's just gone a 61.8% retracement of this entire range, and then sort of failed. We're going to have a look at it a little bit closer in a second. So here we've done the retrace. So often you can come back down to around about 9,200 and then churn some more and then go higher towards that 10,367. So at the moment I'm not super positive of the German DAX. I'd rather, of any of the ones, I'd rather be shorting the German DAX. And let's look at the Dow, see what it's come up with. And it's saying wave 4 was the 1932 low, and ABC here, and the wave 2. Now, how that works, I don't know. But overall, we can see on this little count, if it believes that this is an ABC, and the reason I do this is because this gives me an unbiased count. I have my own thoughts in my head about what the Dow is doing, and it's saying that it's wave 1, 2, 3, 4, 5 of C. Now, that would generate a little bit of concern. It still may go to, when I was on, I think I was on Switzerland, I mentioned 17,000, 16,800 in the Dow. It's pressed higher than 16,800, obviously, but not a hell of a whole lot. I did think we'd see 17,000 sometime in 2017. I didn't think when I was talking back in 2012 in June saying, hey, this is a good buy, I really didn't think we'd be there where we are right now so quickly. And I still think we'll see 20,000s in the Dow, 25,000s eventually. This machine count is not agreeing with me on that. And that's a little bit of a worry. The target could be towards 18,284. If we're going to get one more push up in this fifth wave. So fifth waves are scary because they pull back so deeply that you think it's all well and done and dusted, but then they keep on. If you are trying to maintain yourself long, your stop is at 15,284. If you're trying to hang in for the bigger long term, I wouldn't have it where it recommends it. That's below 10,362. But all in all, German DAX we're going to talk about now. We're going to go on to the European stuff, and we're going to talk about we have some wave counts that are signaling end of trends. The BSE, which is the Bombay Stock Exchange 30, the Dow Canada, Jakarta Stock Exchange, the Dow Jones Industrial Average, New Zealand Top 50, which has been there for a while, S&P 100, S&P 500, the Nifty 50, which is another index, the Straits Times, and the Taiwan Index, which is central banks willing. Now what we saw As the German DAX pulled back into, we are short the German DAX now. It's rallied back into the zone. We won't be moving our stop loss on our PHG trade. We may move it on Tuesday, but this area at 96.12 was the target area. It can come back down to 93.34. Below that, we start to worry below 92.68. So I'm more negative the German DAX than I am most other markets. We have the FTSE, the Italian MIB, also not so flash if it breaks below 20,230, that sort of area, so 20,230, yeah. And it's also had a good rally and may have one more little test into this zone here, 21,175, sort of following its lead of the German DAX a little bit behind. So I'm not super positive on Europe at the moment. Let's have a look at the Euro Stoxx 50. It's also lacked the ability to pop through old tops, and now we have to think it is a worry below 31.20. Now let's have a look at where our friends the UK FTSE is. That's quite annoying, that one. It has so much massive overhead resistance that it just doesn't seem to want to get through. And here we're on the monthly charts, and representative of this is, fact is that 68.75 area. It popped it back in May, but it just has not gone on with the job. And when we look back further on the quarterly chart, you'll see this very self-same topping area was what went on in 2007. Turn that up a little bit. $67.54. We're still, actually, we're just above that level. Then we go back onto the yearly charts, and you'll see something else. You'll see 69.30, 7,000 as the really big important area. If it popped through that, then we have an extreme bull run that could take it towards such high levels as, in the first instance, 92.49, and even 12,940. So this pattern here, we've seen triple tops, quadruple tops. If the lid gets taken off that, it will be really exciting, and it will lead and give us the indication of what's happening with the rest of the world. And so watch the FTSE. If it gets clear of all this junk, there's a lot of junk up there, but if it can get clear, wonderful things. So we've done Europe, and hopefully everybody's got their answers that they need on a longer term basis for Europe. We'll have a look at the Asian market now, and hopefully I can find this little screen so I can demarcate them. The downtrend ending, and this is old news, we've had this up for a while. Shanghai A shares index, we've seen a good move up. It's press the buttons too many times. Okay, we talked about volatility and China. Let's talk about China. Now, China, you'll all remember the big dirty chart I've had of China for ages, and my view on China, that it's really not the best play until in October this year. And we'll get it on a larger scale. And it's also still in this largely descending triangle, but that triangle did break back over here. Broke down back over here, and we can see that it's fiddling around just a real lot of this. Is on the quarterly charts. Let's look on the monthly charts. You can see this long basing formation. Now what I'd love to see is for this to come back down, retest the just underneath 2000, say 1967, and then get ready for the slingshot. We can see that on most trending basis, we can't yet get long on as an investor in the Shanghai market, but you might want to try it down at 2150 and 2120 as a medium term trader with a stop below 2100. And so Shanghai, still fiddling around, still manipulated, but more for the short-term players rather than the long-term. That's China. What about the Japanese Nikkei? We'll do the count on China. We'll pick that up. It's been done, hasn't it? So I really have to tick that box when I do the webinars when I'm overseas next week. I really have to tick the box which allows you to ask questions, don't I? Let's have a look at. As I've been saying before, 2259 is the target area for Shanghai, coming back down into there, or an escape. I think it's going to be hard to get above 2340, but if it does, then it's going to start escaping to the top side. As I said, I much prefer China later. Now, the wave counts are giving us, this is an ABC, this is wave 1, 2, one, two, 1, 2, 3, 4. We should have a commencement 3, 4. And we've gone slightly to new lows, but just down, I prefer it down to, again, that 1965 area before the next rally. It's still giving it negative, and it would need to get through 2294 on a shorter term basis to change its trajectory. So basically Shanghai, not so fussed on. Let's pull up the, and certainly after October, in October, that's the when I'd like to see a panic in the Chinese market, and then we pick it up from there. The other one that I wanted to look at was the Nikkei, and I'll have a squeeze it out now. The Hang Seng is on bear pause warnings as well. This is the Nikkei, but 14,601. If they give up the currency manipulation, that is the area I'd like to be buying the Nikkei. At the moment, you'd have to be thinking about somewhere between 15,120 and 15,200 as the buying zone. You can see the Nikkei, they've managed to manufacture a wave 1, 2, 3, 4, 5. This one, And what you can see here is a very a bit of a confused pattern. Like normally you'd be thinking this is wonderful, but we do know that it's been cheap money that does it. It hasn't been as successful as in the US, but it's still been successful nonetheless. So we see ABC, and then it's thinking more ABC, and usually wave 2s are deeper than this. The trouble is manipulation keeps it going. It's confused at the moment. If you wanted to flip a coin, you say be long, but be long where you can defend yourself lower down. I also want to have a squeeze at the Hang Seng wave count as well. And the Hang Seng wave count is what you would say is an ascending triangle. However, what we saw over the last week was its attempt, the last couple of weeks, is an attempt on the 24,740 area, and it's in the process of deciding whether it can or can't do this anymore. So this high here, we see it's been attempted, but really in double top land. And a failure here would signal a move back down, probably about to here, 21,138. So you can be bullish Hong Kong, but you need it either a tight stop, 23,000 odd, or sorry, 23,000. Look at the chart. Much better looking at this one. Tightish stop should be around about 24,400. Look on the bigger picture here. This little top here was at 24,988. We see it just snuck through there and breaking back down through here on a longer term basis at 23,400 would signal being not so good. So Hang Seng, okay, but if you've been long for a while, no need to worry, but possibly a pullback against. We're done the Nikkei. Now, my conclusions are simply this. And there's not much else you can say, is that it's still bullish for equities. There is still the bullish. Chances of new top pop are greatest in the Nasdaq. That's the highest. A new top pop, S&P 500 to 2010, has about a 50-50 chance of happening into Tuesday. The new top pop into the Dow is a 30% chance. It's getting smaller. In fact, I'll give that a 25% chance. I think it's going to be harder and harder for the Dow to get up into there. So the major indices are not not weak, but they're not in unison. Now China, it's got to the top of the triangle already, and will it fail is the next question, and the answer is it's trying to but hasn't. German DAX is weak with the best selling into Ukraine. The Nikkei is a fourth wave sort of thing. It's a big choppy move, and it's this move, and it should go higher eventually, but I just don't like the way that it's doing it. Now we did see that early August usually sees a rally, and late August, and then down into mid-September. These are things that we should be thinking about. Now, once Labor Day is finished, usually the negativity sets in, and the bigger traders come back. Now, we've heard words that George Soros is short $2 billion. In the overall scheme of things for George Soros' funds, that's not much. We also noticed that George Soros was short the UK pound for about 3 or 4 months and about 30 big figures before the Bundesbank convinced the Bundesbank to step in and help him out with that short position. And it was actually the Bundesbank that broke the pound, not George Soros. He just happened to be the biggest poster boy for the decline. I was actually short at that time off the top. So fantastic. What I'd like to do now is to, we've got to turn around and think about the Australian market. And we'll go into that now and head into the Australian market side. I'm not going to throw it open to questions at the moment unless you've sent me an email, and I've called for that. And I'll just go in and have a look and see if there's any sitting in the box ready to go. Any questions? If there aren't, we'll do that now. Okay, the answer is no questions are in the box. If you have any questions for the Australian market, then send that via email. Okay, so standing up, welcome to the Australian Stock Strategy Update 2014. Sunday, 31st of August 2014. As I said before, I'll be on one of my weeks holiday. I'm going to go surfing. I'd like some sun, although the sun in Sydney is actually starting to come out, which is bloody typical. I think it's been crap for however long. It was even better in Melbourne last weekend. But anyway, I need some sun and I need some surf. I will be doing the regular webinars for everybody, but in a different way. I'll have some short burst, solo speed webinars. Please don't ask me any short-term questions. I'm not going to be focusing on the short term. I'll be focusing on medium term and longer term in any questions you ask. I will ignore any questions that are of short-term nature because I don't know when I'll be answering them. So if you're asking me whether you should be turning around we turned around the short on Friday for FMG, but questions like that I'm not going to be able to answer very quickly. The buzz is property at the moment, undoubtedly. If you look at the property investment expos, you see tons of people in the property areas, and next to them is the shares section. Now there's no one there. People are putting their money in property. The next major tiers event will be in property, no doubt. So much money has gone into it, so much money is leveraged, so much superannuation funds are now leveraged to the property market, and we've seen the smaller priced properties disappear in Sydney and to a lesser extent Melbourne because people are putting them into their property, into their super funds. They're allowed to do it by some rule. People like property. They've been burnt by stocks, and we'll see some tiers, particularly if the government decides to put a clamp on Chinese money buying, or mainland Chinese, particularly buying property. What the property does, it sucks the interest and money away from shares. What we're seeing now is crushed rents. A few months ago, I was looking at properties to rent to get my boys out of here and out of the house. And you couldn't even find a property for $750 a week, a 2-bedroom shoebox in Bondi. Now you can find tons of them, $550, $500. The property rents have been crushed. They're also crushed in Melbourne, as I was looking for one for her boy and her son and his girlfriend, and to get them out of the Melbourne place. And basically, you can a place that's selling for $800,000, you're getting $450, $500 worth of rent, and that's not very good. So the rental returns are pathetic and people are geared. So we're starting to see some vacant signs, and guess what? This isn't the right thing that I said that we should. We're seeing vacant signs, but going up, a lot of leasing, but they're taking them down because I think there's so much stock out there to rent. We're seeing sales slowing a little bit in Sydney. There used to be units that were going up for auction. They put up the auction sign, 2 days later, they disappeared. The place has been sold. In fact, the place in Bondi, which we sold, a 3-bedroom unit, the offer was just too good to refuse, like end of last year, and we didn't run it through to auction. There's almost no point. It would have been a good idea to, though, because probably would have got some more money. Anyway, this is stuff you need to know. This information may contain general financial service advice which may not be suitable for you. It is issued by Ideal Financial Group, a corporate authorised representative number 299753 of Aruda Proprietary Limited, AFSL 338674, and Adesh Trading Proprietary Limited. You should consult a licensed investment advisor before making investment decisions, and understand that trading in any instrument, shares, CFDs, foreign exchange, futures, commodities, and investing in property and investing in shares carries a risk of loss. And you need to work out whether your investment objectives, needs suit you psychologically, emotionally, and financially. Here's my forecast for 2014, and you'll notice that I said the best shorting was in late April, early May. The top was in late April, and then we had another buying session in late July, late June, and the best position to trade was long August and November. Now this forecast is a fairly long-term forecast, and it doesn't take into account jiggles in the months. What we can see here is that generally it's been okay. We didn't expect a full-on rout, and we do think there is a sweet spot in this period. So maybe if the US backs off, Australia gets better. We have been sitting slightly long in our super funds, just maintaining that on the self-managed super funds, and maintaining a bias not to be too short shares if you don't have to be. And here's the cycle as well. You can see here we look for smacking time mid-April to June, and buying time end of June. And so far the Australian market is still largely like this, in a big range really. So we're looking for the next leg up into that time, and a holding time July to late October. Now let's look at some of the parts. This is the constituent parts of the this is what makes up the XJO, and I've used here for the example the futures contract, but just see that as an extension of the XJO. What we can see is the energy space. This is daily bars. Unfortunately, I should have done the weekly bars. We see the energy space backing off a little bit. which it's been the main driver keeping this market afloat. The materials index has been hurting it, and the financials index has yielded nothing really for it. So at the moment, the strange pattern is that there's a little bit of push up, a little bit of push down, and these indexes are not driving it higher together. They're sort of falling all over. One will go up, will do well, like the energy space, then the materials go down, and then financials stay up. So the whole overall index has been sloppy. What we talked about, well, Tony Locantro said it pretty well nicely. You should be picking stocks rather than worrying about the index, because look at this. This is what the index has done for the last 6 months, which is SFA. And when you look at it on a larger scale, it's done SFA for nearly 12 months. This is the energy space index, energy index. We were looking for a high in April and a low in late September. Now, the high came early, and so the low has just kept on rising. Now, do we get a pullback into late September and then another opportunity to buy? I'd love to see that. What we have seen is one of the stocks that makes most of it up, Woodside Petroleum, pay its dividend and then stay down low. So it hasn't broken down, but you worry about Woodside peak below 40, really below $40. I think it'll still have support down to $40, even $39.16. So if it does break down, it's a buying opportunity for the next level up if it breaks down in September. Materials index, I said we'd top out in mid-April, and basically a base building at annoying time. It ran further than that, making a high over here. And I think, again, still it's going to be a base building before going higher around that October period when China starts to get it come into its own. The financials index. Now, I thought we'd get some smacking time in late April. Let's have a look at that now. It didn't. It basically here, was over here. That was at late April, where it was at top. It got smacked, but it's retesting now. It's a worry below 62.31. At some stage, we should be looking for companies that produce something rather than just sit on people's money and make money off it. That would be a fantastic thing for Australia. We have just become a services industry with some high-end products, and we used to export iron ore, which reminds me, I didn't look at what happened with iron. I think I did yesterday, but I want to have a look at it again just to remind myself. Iron ore has come back down. I did say 92.90 would be the target area, and we can see it dropping away in a somewhat trending motion at this point. It's gone a little bit deeper than it should have, and so it's setting the opportunity for 86. This is on a final futures price. The spot price, I think, has gone down towards 86 already. But at the time being, if it gets above 95, it's changing trend and looking for 101. At the moment, it's hands off, and that will hurt BHP and Rio's. We'll talk about them, Rio's charts as well. And a buying time into late July. So we had a buying time late July and then a lower top into December. So I'm not super shoot the lights out bullish on the financials, because I believe, rightly or wrongly, we're getting a bit of a run in interest rates lower around the world at the moment. But that run is in the euro dollar, saying it goes from 99.75, which is 0.25%, and it may go down to 0.15%. That's still not a lot of capacity because its base level is 0 on the Euro-Dollar index. I don't think we can actually trade that above 100. They might have to recalculate the way they do things if interest rates go negative in the US. This is the gold index, and we can see I was looking for a low in January, which did pretty well appear. It was actually end of December, or early January. A buy in late May, which did appear, and a high in October. We can see here there's also a takeoff point in September. And we're sitting here right now, we're right now on this takeoff point. Now, we are long a bit of gold, and we're more keen and more positive on the gold stocks. So watch out for this. This might cause a little bit of a kick for reasons we don't understand. It could be war, it could be natural demand. I tend to think at this point it's probably war, but who cares really? But generally the cycles point to a high in October for the gold index. Now, the bullhorn's warnings. In terms of BHP, we have support at $35.68. Now, we have got bullhorn's warnings, and I'll pick up the chart for you on BHP. As you know, I didn't understand, we missed out my target of $39.87, which you all know, by 13 cents. It failed up here and got smacked, and volume is not nice. Now, $35.09 is the is the target area on this. And we also have support down at $35.68. So I think that what we'll do is we'll look for the support down there and actually put a lower stop than I had imagined, because it's the right sort of thing to do, with 34,985 stop close only. So I haven't made this a PHG trade, but if you are thinking of buying it, then you would have support. You look down to buy at $35.68 to $34.09, so $35.09, with a stop at $34.85. Your stop loss, your actual position should be only a dagger catch. I'll let you know why, because that volume is disturbing on the weekly charts. Let's see if we've got anything else on the daily charts. There's a little bit of a reason for a buyback here if you are already short. I gave you that on Friday. I said if you were short, you should buy back around the open. That seemed to work, and I gave you that on FMG as well. So if you're looking for a short trade, you could sell it on a breakdown below $36.35, a continuation trade, with a stop above $37.05, targeting down to $35.09. On the other side, we have BSL. And BSL, I really think that BlueScope, if you're long already, you should have your stop below $5.40, because the best buying is down to $5 and with a stop loss below $4.80. Let's have a look at BSL. It is on Bullhorn's warnings. You can see that it's fallen out of bed. It was at former darling. I would be interested really on a medium-term time frame above 630. And best buying is down to this $5 area. Yes, it's done a retrace. You may see it up to 578, 556. That's why I say put your stop at 540 if you are already long. A few PHG members wanted to buy it down here. We're not seeing that volume come in, so just be cautious. You might even put it at 530 if you want to have a bit of a wider stop. James Hardy is also a buy on a close above 12.92 with a stop loss at $12.56, or wait for lower levels. Let's find out what those lower levels are. And you can see this is a largely corrective pattern, which probably pulls it down towards about $11.27, 11.38 do that. 11.38, 11.34, 10.70. This sort of area would be the best long-term buy. When I say wait for lower, that area is 10.71 to 11.38. That area there. And the stop loss need to be below $10.45. Okay, next one. Rio, the best buy zone is down around about $60.11, or a break above 63.58. If buying down at $60.11 as an investor, your stop is at $58.20. Stop loss $62.25. Now, Rio was doing better than BHP, and now it's doing worse than BHP. You can see here it's got this contractionary triangle. The stop loss, if you are long, and if it breaks that contracting triangle, you've got some trouble. Now notice the volume has been heavy on the monthly on the downside. So you should be at least thinking about $60 on this, and generally ABC, the best thing to do is to think about it going lower, down to that $60, maybe a bit lower. So we talked about Rio. We've got some bear pause also in the markets. Let's check the questions box, which is the email box if you're sending things through. The bear pause on the ASX are Boral. Let's look to see whether we can pull out of some good support on there, see where we're going. And Boral has been ignored for a lot of times, and it's had a pretty good run actually, pretty good run up over the last period. And you might think that everyone's saying how. So probably the best thing with this one is to run, if you are long, to run a stop loss below 528. Let's have a look at the chart here. And remember, I'm talking longer term time frames. So Boral, we can see here in a bit of a range. Generally, I don't think it's done enough price action to be a major sell. So what I'm giving you is a stop below $5.28. if you are long. I don't think I want to go into trying to sell that at the moment. In fact, I'm half inclined to think that it's on support, and if it broke through 560, then you'd buy it. The next one is CSL. Now CSL has had that fantastic run, and it's all capital management stuff. I don't know when that buyback is affected. What we can see is it had a little bit of an outside reversal day, which could bring it back down to $71.40. So if you were thinking of shorting it, I'm not so keen to short it until it shows a better sign than just an outside reversal day. Stop loss would be at $75 if you are shorting it. The trend is still up, and it could come back down somewhere between $70.69 and $71.40 if you are shorting it. We won't be doing that for PHG. IAG, also on bear pause warnings. We can see retesting some old tops, and you have to think it's going to break $6.63, just pop a little bit higher, and then maybe even $7.41. So no need to short that unless it closes below $6. So I'm not that in love with shorting that one. Next one is LLC, Lend Lease. Now we are long this as a PHG trade, and it's been working nicely for us. We've taken some profit, but there was also the target is not far away. If you look inside the box, you'll see the profit target, $14.83. We'll start to be peeling that off soon. Stop loss should be $13.47 if you are long this. We do have a tighter stop loss for the PHG purposes. It's currently sitting at $13.80. So still good, $14.79, a bit of a target, so not that fast. The next stock that we're looking at is National Australia Bank, so LLC. It's okay to keep going. It's been surprising in terms of profit and stuff like that. NAB has been one of the, normally I don't prefer this, but I do now, versus I prefer NAB and Westpac, as you know, and ANZ to CBA. But NAB has broken up, and I can't see a reason to get too bearish for it unless it breaks down below $34.65. So if long, intermediate time frame, stop $34.65. Target $36.34, $36.02. If you wanted to shorter stop loss, $34.88. I'm not so bearish on NAB. ORG is the next one, Origin Energy. And we can see it's had a good spike. If you are long this, you can have your stop loss here at $14.50. Next sort of target area would be around the $18 on the top side, but $16.11 in the shorter term basis. If you are long shorter term, stop can be at $15.53. Qantas has been rallying. A bit in the face of its bad profit numbers. I mean, they're writing down planes, for goodness sake. Why do they cause a big fuss about that? Those planes, when I was working at Qantas, we were funding them. It was 1992, for goodness sake. And whenever I get on a plane, I have a chuckle when I see those 767s were older than that. You get on the 767, and they were there before me. You know, it's like most of them. It's like the fleet's just very old. The 747, also the jumbos. You know, I don't think they got any more jumbos after the ones we financed in Treasury there, and I did the currency work for. They should have bought the 777s. They're the best planes, better than 787s. And that was all Jeff Dixon's fault and Peter can't remember his name. It was Peter Gregg. Those guys were just interested in their bonuses. At the moment, Qantas, I wouldn't be selling Qantas. The volume is good. I am excited if it gets above $1.60. Target will be $2.90. Qantas has a habit of going up to about the $4 mark. Now, I've been looking for 69 cents on the downside eventually. If it can't get above $2.90 and turns down again, you're going to see 69 cents. But at the moment, they're having a lash, and they've cleaned the decks, which they should have done previously. Buying is good. Short-term target 176. If you are long and conserve, have your stop at $1.29. I don't want to. I don't think this is a stock to be on bear calls warnings. It's a stock to be sold. It is on bear calls warnings, but it's not a stock to be sold. QBE. Now QBE is one of the ones that is in repair mode. We see some okay volume, but not till it closes really above $12.10. That'll get exciting. If you are long, you can have your stop at $11. If you do want to short it, you would short on a break below $10.94. At the moment, I can't get too excited about putting it into the shorts category as well. SGP, this is one of our former hot property stocks, and it's working well. I wouldn't be selling it till $4.39. A rejection off there, or $4.10 would be a stop loss. So nothing to do there. Westpac, we are long on a PHG trade on Westpac. It is one of our preferred banks, so my bias is not to short this. We're looking for $37, $38, $39 area. You see volume picking up as it's going. We've had two good trades of that one. One was I was off in the Pacific, and hopefully this can keep on going higher. Nice ABC pattern to the downside, and really a break above $35.30 should be buying again with a stop below $33.97. So I'm not too bed down on Westpac just yet, unless it breaks at $34. We do see a lot of the trends at the end, which is XFJ. We've seen, I sort of agree with that. XJO, I'm puzzled about that. And XPJ, I'm also puzzled about that. XTJ, I think, has got the capacity for more damage. It sort of got knocked down with Telstra quite a lot more. So what I would say is, if you're thinking about getting out of this index, it wouldn't be till below 1870. If you want to get out, it's below 1870. I'm not going to be shorting that index, but watch those levels. It's not performing as well as it could do. Now, we have a conundrum here. I'm waiting for questions and I can't get them through the group. I'm going to see if this has popped up. There is a window which says chat. There's a group chat here. See if you can answer through that. And if you can see group chat, and it says here, okay, it doesn't look like this is, I'm going to get any message here. So has anybody seen my message come through? It doesn't look like that's going to work. I don't, as I said, this is a new service, and I do know that I've got to click on a particular button and it doesn't seem to work. So maybe what we'll do is I'll allow the questions when you if you're watching this, then people can actually send me a question. Attendees. Okay, here we go. I think I can do. Okay, here's the chat box. Please send me a. Okay. Okay, great. Okay, so we did Moro. We looked at BLD. This is bring out your dead, Moro. Is that right? Yeah, this is good. It's working now. Thank you. Oh, that's such a relief. Oh, I'm glad it's there. This software has got some little quirks. Not quite the same as GoToWebinar, but I'd like your feedback on it, and with the videos I have one on there. So the question is from BLD short term. Okay, Mora, and this is bring out your dead. I'm doing the bring out your dead question. So if you bought here, and you think, and if you bought up here and you feel that it's a dead one, stop would be below $5.20, or even $5.30. Stop close only more. At the moment, I'd like to give it a little bit more room because it's sitting on the old tops. Break above $5.60 would be healthy. Okay. Oh, this is fantastic. I didn't have to get rid of the questions. Okay, so that's a bring out your dead, and it seems to be less people talking about that. Stocks have done well, so you don't expect that. Now, I'd like to turn to, is it time to bank the cash? We have had a lot of stocks moving very well, and I will pick one, and I know it's going to be a controversial one, but I just have to do that. Let's have a squeeze at. Let's have a squeeze at the one that they call which bank? Now I'm going to have a look at which bank. And which bank has had come down to a, or it's Can Bank. That advertising extremely cryptic to me, with that really good actress Toni Collette, but it's really confusing. Maybe I'm not young enough to understand confusion or vagueness. Different world, I think. So this is CBA. Now let's look at it on the monthly charts. We've broken down just a little bit on the monthlies. And really there's, in terms of support, the first area I would be looking down to would be, the big area is $76.18 on a bigger scale, if we see another close below $80 on a daily or weekly basis. 76.18, there is some support around the $78 area as well. The biggest support is at $68. That would be a really good place. When we look at the charts, we draw in some patterns. Just let me draw it. Okay, let me draw it. We see a large struggle street pattern. It has not broken, but it will start to do that below $80. So I have big warning signs on financials index if we get a breakdown below that level at $80 again in CBA. Now remember, CBA has been doing all the driving of this index. The other ones can do well, but they're just being chased by dividends. You can see here also this little pattern. We can find up the breakdown point now from on the weekly chart. And again, that's coming out as 80 bucks. Maybe this week, maybe a little bit lower at 79.50. Should it break down 76.50, best target would normally be around about the 71.91 area or $68 as we've seen. Dropping back down onto the weeklies, sorry, the dailies, we can see nice volume up here, but $82.18. If it rejects from there, maybe $82.70, then expect $79 or $77.64. So CBA would be the one that I would expect most of the decline to come from. Now, somebody's asked me a question. I can see it sitting there. Okay. So is it time to bank the cash in CBA for an investor? Not unless it's below $80. Now, in 2 minutes' time, I'd like you to give me questions on ones that are back on your bike, or at least ask questions now, and I'll answer those. I can't think of anything that is really a massive back on your bike at this point. We might have a look at MGR. We did have a run on MGR recently, and we've got out on a PH2 trade. And the answer is, to be back on your bike above $1.86 on a closing price basis. There's nothing really to show us that has changed. We did go long STW, and we took profit on that, basically a bit on the way up, and then more. It is in a triangle, so back on your bike on STW, which is the index, is a break above $53 with a stop loss below $52.44, or down at $52.10 or $51.99. So that's the back on my bike, back on our bikes that I can think of. Now, in terms of conclusions, really there's nothing to conclude that the world's over yet, and it's really American dependent. Australia still can be strong. Even if the US does flop a bit, if it does. So I think the money will transfer over to the Australian curve. I'm cautious of CBA. I like the non-CBA banks. And I think that we'll have a look at some of those indexes now. I just wanted to write in a bit of conclusions. We are coming to the end of the session, and I'm waiting for some questions here. So what we have here is we want to see if we're coming to the end of the trend. Are we in wave 4 and uptrend in some of these indexes, and then it'll give us something. No, we're not in wave 4 and uptrend in some of these indexes. We're looking for wave 5s in uptrends. And as you can't see that because I haven't got it in front of you. The XFJ, XJO, and XPJ and XTJ, which are all largely interest rate sensitive animals, are getting towards the end of their trend up. So let's look at XPJ because it's been one of the ones that I've been favouring. This is the monthly chart. We've been looking for a target somewhere up to 13.17. That doesn't seem to be a problem at the moment. So in terms of the monthlies, it seems to be trending okay. We've seen a pullback, and where I'd worry most is below 11.20. So we've seen a good move, and we've banked the profits in our PHG trades on that. So I'd like to pull my head in on the property, but I'm not seeing it as completely dangerous. Now, this is the financials. Financials are calling this wave 1, 2, 1, 2 with a target towards 6,503. So we've got targets 6,503. No real clear sign of trend. So I'm not so excited about financials, but it may have a little bit more, about 180 point push. Stop loss would be below 62.55 if you do want to get into the financials. Now, my issue here is that I want to do an XTJ count, and we'll pick that up and we'll wait for the machine to do it while I do mine. And we can see XTJ, big pullback. We've seen a nice 5-wave structure, a big pullback. It's deeper than this. I think you'll find that this is a wave 5 that will probably see towards 2000 again. And the real risk, as I said before, is below that 1870 area, not just now. Driving up to the monthly time frame, we see an exceedance of the 2005 top, and so the worry would be below 1870 again, only if that happens. The trend is still up, albeit a bit harsh. So a pullback down to, this is machine saying a pullback down to 1869 is possible, and then 2081. So if you're getting a good correction and you get a good dip, look out for the Telstra stocks. They're probably overloved at the moment. So there are no really big conclusions here. Not a lot of change in the offing. Australia still can be strong even if the US does flop a bit, even if it does. I do like the non-CBA banks. I'm cautious a bit about the property, the old favourites that we used to like, and really, it's stock specific that's important. So if you are stock specific, be more stock specific. Okay. Thanks everybody. Have a good day, and I'll see how I can go each time we do the webinars, and I'm getting more comfortable with this software as the more that I do it. We might actually go back to using this all the time and chucking out the other one. The question I have though is whether the question I have is whether we keep doing this and how I handle that 1 minute lag, because it's quite annoying waiting for that lag. Thanks everybody, have a great one and enjoy yourself, and get out there in the sun if you're in Sydney, because you deserve it.